Hi everyone, welcome to WYC channel. My name is Rifad. As most of you guys know, the earnings season has commenced and it's exciting. And one of the stocks I kind of spoke about is IBM, and want to kind of go through their release of their quarterly earnings, kind of go through also their what I call just goes revenue and like what they're expecting, and point out some highlights which I think were mentioned because he held kind of a call, like, with say with Jim Cramer, and that's kind of interesting. And after he went through certain stuff, and also I listened to the earning calls, read through the transcript, and I find that certain stuff worth mentioning, and also finished out with some, what I call problems that I see, I would say, and overall wrap it up. So let's go over to the computer, just kind of go over what was the analyst expecting and what was the revenue, and finish it all over. And before I begin, just want to say, if you like this video, hit the thumbs up. That'll be awesome, because that kind of shows, like, you guys like this type of content, and also it helps promote my video within YouTube and everything. So that's kind of great. So let's begin. So switch over here. Boom. So cool. Let's start with the what was I expecting. Good thing is the earnings per share came at $1.84, and it was kind of 6 cents above the consensus, but still lower than last year. And that was kind of okay, because we're kind of expecting that with the current situation and everything and all the stuff getting on hold. We're expecting this kind of decline, but it was kind of over than consensus. It's kind of good. Revenue came across around 17.57 billion, which is also it came lower the analyst expectation of 17.97. That also is kind of came lower, but it's also lower than last year. So those are kind of highlights I want to mention. It's kind of concerning, but we move on. Then go over here to their sheet that I will put down in the link below, so you guys can go ahead and kind of recap for yourself. But I would just want to compare year over year. You guys can see, like, overall it has been down a bit. Like you see, it's 18% non-GAAP revenue. EPS has been down 18%. One of the good things is Red Hat has been up overall, with the adjusted currency around 20%, because it's awesome, because as they mentioned, Red Hat was growing in the teens, but now it's hitting in the 20s, so it's pretty awesome. So it means they're growing a bit faster now with combining with IBM. That's kind of a good thing. And also the cloud thing is also growing roughly, so it's kind of up 20%. So that's pretty good also. So yeah, I just want to go through that. Like, it's nothing big. And another one more thing is overall earnings, like you guys say, is like 18 billion. Now it's like almost 17 billion, so it's dropped. But yeah, I think this is kind of was expected, because they were already doing a major shift, and they were slowing down and focusing on certain areas and cutting back on certain areas. So that kind of said is, they're earning less. And now people are going to ask themselves, like, hey, how come the EPS is up? Main factor is they also share buyback was one of them. And another factor is they have been improving their margin in certain areas. As you guys can see here, margin has been improving in global financing, systems, and also global technology services. Went down a bit on cloud, but went up in global business services too. So they've been improving theirs. It's pretty good also. One thing I would mention, it's worth mentioning, is the debt. The current debt went up, if I'm correct. Yeah, you see it from 8 billion from last quarter to 11 billion. But the long-term debt has been reduced by around 2 billion. But I would say they mostly took the what do you call the debt, I think, to increase their cash position. That's my understanding, because the cash position went from 8 to 11. It's gonna make sense. Roughly, I think there's a couple of dollars missing, but overall, I think they use it to increase their cash position there. So yeah, so let's kind of switch back to my screen, and I will just kind of go through kind of pointers which I think is good to cover. So let's do that. So as you guys can see, so one of the things he talked about in the because I kind of wrote a nice, I'm kind of sometimes I'm old school. I write down in like notepad, so the dividend, one thing, is been secured. That's one of the things he told in the meeting with Jim Cramer. So dividend has been secured. That's kind of good. But the downside I see is that dividend has mostly been financed by debt, with the short-term debt going up to increase to kind of keep the dividend secure, so the basis of people happy, which I think is good. But it comes with this risk and things. Like Red Hat going up, but one of the good things that they have overall is their recurring revenue, because 60% of their revenue is recurring. That is one of the great things, because that got them out of the 2008 crisis, the financial crisis we had. One of the things that kind of got them out is recurring revenue, because there's no any more sales interactions needed. It's automatically just kind of piling in. So that's kind of a great news. And also another thing is their main customers are financial services, public sector, government, and telcos. So that's kind of a great news, because having a majority of customers there currently with the current crisis, they're not as much affected, I would say, as per like restaurants or tourist areas and stuff like that. So that's kind of good to hear that they're secure over there. And also one pointers that they want to mention is April so far, as per the CEO mentioned, is good, isn't too bad, like didn't see any kind of problems, I would say. So it's kind of, that's good. And one more other factor is they're having what they call calls with customers. They had back in March and April-ish, they're having calls with customers. Is mainly just to kind of, hey, how can we just like preserve the current operations and increase my cash position? And they're putting a lot of their projects on hold. That comes into my problem section, because projects on hold, it's a problem, but I think it's a short-term problem, because once the economy starts going back up, the projects will start rolling back in, and until they can please their customers, help them, save money, keep the operations up and going, may help them, refocus everything, and once the projects start piling up, it's good, because that means that show that they care about their customers, and customers are going to retain and stay. So that's kind of, so I see that's a problem, but I think that's a short term, so it's kind of okay. The debt has increased. That's something I would mention, but they did that to increase their cash position. In my point of view, when reading through the balance sheet, that makes sense, I would say, because currently debt is kind of cheap. So I think that's helping and in favor of them. That's kind of good. So I wouldn't worry much about that. And one of the big thing that I think the problem that came up was the guidance there for the whole year was withdrawn. That caused a big shock in the overall market, because they're making uncertain, which I think is a problem. But I think that's also, again, another thing, is a short term, because it's okay, because it's normal. I think that's the smartest thing to do, is to withdraw your guidance, because in the current world economy, you don't know what's going to happen next quarter. And I think this, and like they mentioned, maybe in the second quarter they will be able to give a better forecast, because I think that's good, because you don't want to misguide anyone or any people that are kind of analyzing a company, saying, hey, I'm going to hit the previous guidance. That is called living in a unicorn world, which is not the reality. So it's kind of good that they're doing that. So I think that's good. I think overall, with their kind of current client and everything, they have short-term problems, but those short-term problems, like I said, short-term, and they don't need to cause an alarm or stuff like that. So they would be able to pass through it, in my point of view, and come back into business, and the debt will go down, the business revenue will start going back up, everything will start placing in. Overall confidence, the CEO, he seems really good, he seems on point, so it's really exciting. So yeah, then I would say that's kind of my thoughts and problems I kind of pointed out, and the highlights of the earnings calls. It's a great company. I think it has a great potential overall, and now I think that kind of reassures me, is that they're not as turbulent or hit right now, and they seems to be able to kind of come out of it as a great success. So yeah, I would think that's a good thing. So I don't know if you guys went ahead and read about them earnings, and what do you guys think about them. Drop a comment down below. Would love to know kind of what are your highlights, what are your concerns, and stuff like that. Would love to always talk with my viewers that are viewing, since it's one of my main things I love about this stuff, doing YouTube videos. So you know what, thank you very much for watching. Oh yeah, and also if you're new, subscribe. That's awesome. So thank you very much for watching, and have yourself a wonderful day. Whoosh.